Alright guys, welcome back to this week's quick dive. Now, what are we going to talk about? As of this recording, nothing is confirmed, but we might be having a new Prime Minister as our current Prime Minister is going to step down. What will that do to markets? We're going to talk about it today. That's the first thing. The second thing is we're going to talk about some of the tycoons in Malaysia, right? The glove tycoons, the semiconductor tycoons, and why that is relevant to you. And number 3, we will talk about Maybulk. Also, we just want to let you know, we do own some of the stocks in this video.
By the way, we have a stock investing masterclass and the link to register is in the comment section below. So if you're struggling to build your 6 to 7 figure portfolio, MJ and I crafted this class especially for you.
Okay, John. So we start with Maybulk. Maybulk, transportation sector has been doing well as an entire industry. And you know, Maybulk themselves have been doing well as well, right? If you look at the 5-year stock price, it's down 7%. Basically, it's flat.
Yep.
But if you take the 1-year stock price, it's actually up 81%, right? So
almost 1x.
yeah, a lot of it is due to freight rates, or at least people think that it's due to freight rates. But actually, freight rates don't increase it doesn't actually directly increase the bulk carriers, the revenue.
Yeah.
Actually, for Maybulk's case, it is more due to the increase in what we call TEUs, right? This is the trade volume, you can say. So, okay, if you look at the slides now, basically in the recent quarter, they've actually flipped, right? So in the previous quarter, they were losing about 17 million.
That's right.
And then now they are up like 32 million, if I
12 million, you mean? Profit?
No, so if you look at the profit, right, it's down 12 million. Yeah, sorry, it's down 12 million and now it's up 32 million.
Correct.
So you can see the volumes are actually increasing and it's not so much the freight rates. This is something I think I want to get clear.
Yeah.
Now, what is interesting about Maybulk is actually they are monetizing some of their bulk assets, right? So basically they're selling some of their ships. Correct me if I'm wrong, John.
Correct.
And so if you see in the highlighted slide, right, the next slide, it says that they're going to sell the MV Alam Madu and then the MV Alam Molek, right?
Yeah.
So this is a very interesting move because right at the reflation, okay, or right at the how do I put it? The revival of the industry, because you know with COVID, you know, trades have to stop and things like that. Right, the revival of the industry, the shipping industry, Maybulk is now actually divesting their assets. And so in my mind, it's like they are trying to get out of the industry. So before I give my thoughts, right, I want to start with yours.
Actually, if you study the history of Maybulk, this is not the first time they are disposing their assets. And I think if I were to put some sports color to it, you know, both of us are fans of basketball, right, MJ, and Michael Jordan.
Right.
And when you retire, you don't retire when you are lost and forgotten. You retire at the peak.
Yeah, well, you should, at least you should, you know.
You should, right? You should. And I think judging by the historical actions of what Maybulk has done in the past, I think they are very smart in using this as an opportunity to pay down their debts. And if we look at their debts currently, I think it's a good position to, exit when the price of freight rates are high, even though it's not directly correlated as you rightly pointed out. But there is anticipation or enthusiasm in, acquiring assets because other people want to make money during this time. And that's where, you can get good pricing for your ships. So those are my thoughts. I'll share more on the next slide, but back to you first.
Yeah, I totally agree with the point that they should exit out high. And if I was explaining to our research team yesterday that look at Maybulk, right? Put yourself in the position of the CEO, right? And what you would feel is over the past 10 years, the business is not really going anywhere. Right?
Yeah.
It's a highly competitive industry. And it's the kind of industry where it's more or less impossible to build a moat.
That's right.
Like
That's right.
I guess, yeah, even though Malaysia is strategically placed, right, Maybulk's not the only player, right? So there's really no moat. Things are very competitive. Margins are very low. And so for 10 years, you're just stuck with all these unproductive assets. And since the 2008 crisis, trade has actually slowed down.
That's right.
Right? And as a result, it's just a very difficult place to be in, right? And suddenly, you get a big bump. Suddenly, freight. So the value of the ships. Now, I'm not an industry insider, but I think it's safe to assume that the value of these ships is based on, of course, what a buyer would think the future of trade will be like, and also the freight rates.
That's right.
Right? Freight rates, things like the Baltic Dry Index, if they go up a lot, then the values of these ships will go up as well. The way to think about it is, imagine a house, suddenly the rental like doubles or triples. That has basically been the story of the freight rates over the past few months. So if the rental of a house doubles or triples, obviously the value of the house itself is going to triple, right?
Yes, that's right.
So that's why it's going up. But if you were in Maybulk's shoes, or the CEO, you would say, yeah, but this industry, it's not going to last, right? This bump. So now is the time to get out. So I think the question now for Maybulk shareholders is, or people, if you think of buying Maybulk, is what are they going to do with the cash? What are they going to do with the cash? Of course, we all hope they go into high returns on capital industry, like, let's say, technology.
Or EV, or whatever there's hype. Maybe.
Yeah, electrification of anything, right?
Yeah.
But I have a feeling that since the management is a bit more senior, unless they get a younger person in, they might just keep the cash, or they might just do something like property development or something like that. I hope I'm wrong, actually.
Yeah.
Well, but what do you think?
There's a lot of headwinds, and I'm very aligned to what you said. And I think, it very good points that you raised, MJ, because it gives, what do you call it, a taste of how prudent the management are, but also at the same time conservatism. So like what you said, if they don't have, or probably they already have, but they may not allow them to flourish, young people with bold ideas and taking some kind of risk. We don't know. I mean, unless we have company insiders that, when we say insiders, meaning people who are working there and know the culture inside out. But also on top of that, I think there's a lot of headwinds that are facing Maybulk. Like for example, as I was, we did a video on MISC. I think if you point to the top right hand corner, we put a link up to the video there. There's a lot of headwinds facing the shipping industry today, and for those of you who are from the industry, you would know this. But those of you who are not, the International Maritime Organization has actually imposed very strict ruling on the type of fuel ships actually use during their voyages. And I'm going to spare you guys the technicalities, but a more environmental friendly fuel is going to cost the current shippers 70% increase in fuel expenses. So MJ, I don't know about you, but a 70% increase in one of my biggest costs is going to wreak havoc to my business.
Yeah, pretty much, man.
Yeah. And the other alternatives are actually to either change the propulsion type of these ships, which is equally going to cost money. So combined with these so many factors, as you mentioned earlier as well, trade decrease, it's not a good place to be in over the long run, because one, there's many guys coming in as well, and I think the last but not least factor that I consider a headwind is that the amount of ships that are being built and to be delivered versus the kind of cargo that needs to be carried due to trade activities, it's on a decline. Even though it looks like it's on a decline, but you look at the graph that I have right now, right? there's still quite a number of ships to be delivered compared to those that are going to be demolished. So when you look at all these, right, I think they were prudent to, in a way, par down their business. And this is where I think investors need to realize, once you're selling off assets, you get a bump in your earnings because of disposal. Okay. But at the same time, your recurring cash flow, because of reduced assets, will come down. So it will be interesting to see how they pivot. I think the word that I would use is pivot. And it will be interesting to see how they will continue to use efficient use of capital, which I think both of us is just a wait and see game, correct or not?
Oh yeah, absolutely. And I think learning about the management, trying to find clues about where they want to go.
Correct.
And of course, it's a Robert Kwok company. Correct. Is it still a Robert Kwok company?
Yeah, still. Yeah.
So, I mean, if he's still, pulling the strings, essentially, I seriously doubt that we're gonna enter some high returns on capital industry. This is not shade on Mr. Robert Kwok. It's just not what he's familiar with, right? So
correct.
That's that.
Unless you bring in fresh blood and trust them, empower them, who knows? That could happen as well. But
yes, definitely.
Yeah.
Before we move on, guys, just to let you know, if you haven't already known already, we do accept essentially your stock reports sent to us through this email right here, and we will actually give you a totally free review. Now, some of you have already sent us some very good reports, and some of you just asked us, what do you think of this stock, right? Or I've looked at this stock, what do you think? That is not what we are looking for. We actually want you to write a report, right, outlining why you think the stock is good, providing the reasons why, providing your analysis, and then we will comment. Then only those reports and emails we will entertain and comment. Those that do not, unfortunately, you would have to try again. So yeah, this email here, if you got a good stock idea that you want a little bit of second opinion, we'll do it totally for free. All right, so next, we're going to talk about something slightly different, but we think this is also very important. And that is TYCOONS in Malaysia. And this is important because it's a sense of the shifting time.
Yes.
It gives you a sense of what the trends are globally and where you should position your portfolio, actually. So, John, tell us why we're going to talk about rich people today.
Not so much to envy their wealth, but as you pointed out earlier and spot on, follow the smart money, follow the money trail. As an investor, it's always looking at where to position yourself, and this is a good indication or a good metrics that I would like to use. I mean, ever since young, I like to study successful people, but not so much to envy their wealth, but to see how they did it and whether you can enjoy a piece of the cake as well. So why, I think in June, 21st of June to be precise, Forbes just released their latest list for Malaysia, richest people in Malaysia. And I think three groups. The third group was based on, I was just looking at these two groups, and then the third group just suddenly popped up because I was screening through the list. It was quite interesting. So the two groups, the first one is being the gloves. These two groups actually benefited during a pandemic. So here is doom and gloom. There's a lot of, pessimism in the market. And yet, these were the guys that benefited in the first round of the pandemic, which is last year, 2020. So as you can see, Kwan Kam Hon, Lim Wee Chai, Lim Kwang Sia, Stanley Tai, and Wong Thi Sun, they had their net worth grown by quite a bit, a bit, right? And one key takeaway when you look at this was that businesses that they have, a majority of it was export. So in relation to what we're going to talk about in the later part of the video, whatever political turmoil that we have within the country, kind of like these guys were insulated from it. I don't know.
Yep.
Would that be a better word to say? Yeah, insulated from. Yeah, there may be some policies, like windfall tax that they're trying to impose on the glove companies, but likely it's going to be a one-off. They can't be doing that every year, right? MJ, I don't think if they do that every year, then I think the glove guys will just pack up and just go to another
the wind
country.
never blows at the same direction, so
Correct.
changes.
Yeah. So the second group is actually the semiconductor tycoons, and Tan Eng Kee. I ironically, MJ, I attended the same polytech as him.
Ah.
But obviously he was way senior, way senior, right? And then Chu Chen Wang, Ng Chai Eng, Lau Chi Kiong, Ong Kwang Eng, and Stephen Xiao Kok Tong.
So for reference, the Mr. Tan, what is his where did he get his wealth from?
So he actually started this company called Grey Tech. I think so most savvy investors or seasoned investors will know how the stock actually did. MJ. So it's like he came out of nowhere, and then all of a sudden he's almost a USD billionaire right now, 965 million. And the reason why we put them out is not, as again I said, not so much to envy their wealth, but to take a hint from them where the money is, where the smart money actually is. And they benefited the second round due to the semiconductor demand that we face today. Automotive, electronics are taking a beating because there's not enough chips to go around. People are working from home, more use of electronic devices. There's a lot of electronification in our life. And I think, EV cars, these are the trends that, benefit these guys that are on the list. So us as investors, right, should we not be, taking hints to understand these industries better and to position ourselves better as an investor? What are your thoughts, MJ?
Yeah, if you look at the semiconductor industry and the guys here in the Forbes list, now them are billionaires yet, right? USD billionaires. And it's, for me, it's like a telltale sign that, hey, they've still got growth to go, right?
Right.
If the glove guys can, hit the $1 billion mark, a few of them, the semicon is quickly catching up. So I think you're totally right. It's it's also a good way of finding out why these people got successful, what industries they were in. And the other point I want to make is that, ironically, if the like for example, let's say take Mr. Chu, if his name is up there, it means that his stock price must have gone up quite a lot. So
correct.
So maybe it's not as undervalued anymore, but it gives you clues, right? Really, it gives you clues.
Yeah. And the last but not least was actually this list of oil and gas tycoons. Now, I don't know if you remember, MJ, Tan Sri Shariel and Mokzani Mahathir used to be on this list.
Yes.
The co-owners of Sapura. So they've fallen on hard times. And yet we see Mr. Lim Han Weng, who is the founder of Yinsen, up on the list right now. So I found it quite ironic because these companies withstood the test of time as compared to what we call the popular companies that emerge for short periods. So case in point, Sapura lah. They had a grand vision, and yet they did not had correct capital allocation strategies, and the results show for itself lah. They're buried in huge amounts of debt. They bought assets at the peak of the oil and gas valuation cycle, and those companies that are on this list, Tan Sri Ngau Boon Kiat and Lim Han Weng, they were prudent in their expansion plans, even during peak oil prices, even during good times, and they just didn't go all out lah. Like what we spoke about Maybulk, at the peak you go and sell assets because you get good valuations, rather than at the peak you go and buy more assets at very high valuations. You see, so it goes to show the quality of management and listed them on this list lah. And to touch about your point about hints of what actually worked well for these tycoons was, I wanted to bring up certain government policies that actually matter, and two of them is actually the pioneer status and the investment tax allowance. Now, for those who follow the semiconductor industry or technology sector in Malaysia, you know that they get actually very good tax breaks on their profits, and this is something I laud the Malaysian government for doing. And these were the policies that actually helped propel this, especially the semiconductor industry and the glove industry, to the heights where they were today, where they are today. Because when they started, a lot of their profits could actually be plowed back to, buying better equipment, doing R&D work, and to bring them, to elevate them to where they are today. And in other countries, I think these kind of policies also help certain nascent industries. And I think it's not so much the politics, but it's actually the policies that help these businesses. I don't know. What are your thoughts on that, MJ?
Yeah, definitely. I mean, this is what I would call actually an anti-policy, because usually a policy involves a government getting involved in something, right?
Yeah.
By and large. But this one is the government stepping back, essentially saying, hey, I'm not going to take tax for you.
Yes.
Or I'm going to take very little tax for you. And it's just, yeah, like you said, it's good on the government. And it's just a case where literally if the government wants to improve the economy, it just has to step away.
Yeah.
Right? It's really as
Spot
simple
on.
as that.
Spot on.
And it's not complex, but it's difficult because, naturally, right, if you're the government, you want to do something. You want to, get your hands dirty into something. But you have to realize that you're not that smart, right? Nobody
they
can
like
know
they like to play with levers, MJ. That's why lah.
Yeah. And you just let people, you just leave people be, right? There's people who way smarter than you. They're not trying to be politicians, right? And you shouldn't try to be CEOs as well.
That's right. And then when they actually flourish, it's actually beneficial for the government many years down the road after they've reached stable footing. That's where they pay good taxes to you. Allow them to, step away when they are building. And then when they are, at a certain stability state, that's where you recoup your what do you call it? Your period of stepping back.
Yeah, I mean the people they hire, right? You can, these companies pay maybe 20-30% of their sales to their staff.
Yeah.
So you take 25% of that 20 to 30%. That's the income tax, right? So
correct.
There are many ways in which the government is actually being paid back, although it's a bit indirect.
Yeah.
But yeah, this is a pretty good segment.
Yeah.
Let's move on to, politics.
Oh.
Guys, if you enjoyed the video, as usual, remember to give it a like, click on the subscribe button, share it with your friends, and right beside the subscribe button, there's a bell. Click on it so that you know when fresh videos are out for you. So, John, we might be having a new Prime Minister.
Yep.
Again. And, as you know, this is not a politics channel. And we're not here to give our thoughts on who will win. But we do want to share with you our thoughts on what does this mean for the Malaysian market. Right?
That's right.
Is this positive or negative? Now, as of this recording, we're recording this on a Monday, and the news or the rumor, and by the way, the resignation of our current Prime Minister is not 100% confirmed, but the rumors are very, very, very strong. In fact, if you look at the screen, Reuters, right, already announced it.
Yeah.
So it's pretty close. And, as of this recording, this time right now, the markets have basically not cared. Maybe it's used to it, but it's like, we've seen this before, expected. And a lot of people are expecting a bloodbath. A lot of people are expecting a lot of volatility, because this is yet another layer of political uncertainty in Malaysia, right? So before I go on, what are your thoughts, and how should investors react to this news?
Actually, I don't have too much to comment on it. I think the Malaysian public is already numb. And as you rightly pointed out, we were looking at we wanted to pop up the popcorn and see what will happen to the market, right, MJ?
Yeah.
But the fireworks really didn't happen. I think most of the foreign funds, institutional funds that, did not see certainty for the political landscape in the near term most of it already exited anyway.
Yeah.
Yeah. And I think as prudent or savvy investors, use this as an opportunity to pick up companies that you know are fundamentally sound and will have a quick rebound regardless of what happens. I think, as we pointed out in the earlier segment, MJ, I think look at the policies rather than the politics. I know politics are very exciting, especially over the short run. And I think in previous videos we spoke about if they were directly related in somewhat, let's say, government contracts, infrastructure works and all that, yes, then the politics matter a little bit more. But if you choose to play in what I call a safer space, where businesses that has a growing market or export market that's much bigger than the domestic market,
Yeah.
I think the government of the day doesn't really matter as much, especially over the long run, unless they screw up real big time with policies. They put in bad policies. Let's say they take away the tax incentive, take away the pioneer status, but then they're not that dumb. They know that by them pulling the plug on all that, a lot of businesses will just close shop and move somewhere else. So I guess just wait and see. I mean, take this as some sort of criteria that's beyond your control. I mean, remember what we talked with KCMJ about systemic risks and specific
it's not something
risks.
you can control, right?
Yeah. So
But I'll tell you what you can control, right? So I used the example of the 2018 election.
Oh, good.
Right. And what happened was that once he resigned, people started, dumping stocks, especially so-called politically linked stocks. And like myself, I just avoided all of them completely, which has served me well, but not as well as it can, because one of the lessons I've learned is that when it comes to political stocks, you need to make a distinction. And there's a very important distinction, which is companies that are reliant on government revenue and companies reliant on government mandate.
Yes.
So companies relying on government revenue is what you want to avoid. So for example, companies that get contracts from the government and the government actually pays them tax revenue. So you're looking at those construction companies like, Kim Loon, Gamuda,
IJM.
involved in those like LRT projects and highway projects in Sabah, Sarawak or wherever, right? I'm not saying that these are outright bad companies, but certainly the segment of their business that relies on the government tax revenues, that is something I want to avoid, because essentially, if they don't want to give you tomorrow, they don't want to give you tomorrow, right? That was the case with a lot of the people who were working on like the MRT and all that.
Correct.
Now, where you should consider being part of, and let's say, right, due to this news or any big political news, right, there's a sell-off. There's just this broad sell-off of all companies linked to the government. There's a group that is still very investable.
Yes.
And those are companies that rely on government mandate. So, for example, MyEG.
Yeah.
Although I did the right move of avoiding all politically linked companies in Malaysia, but then because I extended it to companies like MyEG, which had political links, I actually failed to capture the 50 to 80% bounce after that when it went up. And the reason why people thought MyEG was going to fail is because it was linked. That's it. That was the reason. But what you have to realize is that companies with government mandate, i.e. the government does not give you tax revenue, but allows you solely, gives you a monopoly to then generate revenue from the rakyat or the public.
Correct.
And in this case, MyEG was that. Now, with these sort of companies, it's very powerful because it doesn't matter what government comes in, it's very unlikely that the government will kick them out and replace them. Because think about what the process is like, right? MyEG, they are doing something that the government themselves don't want to do. And I know this because speaking to insiders in the government, they actually tell me that they can actually do MyEG's job a lot cheaper than MyEG. And so the question is, why is it that they still want to outsource it to MyEG? And the reason is because they just don't want to do it. It's very mafan, right? Very leceh to do it. And when a company like MyEG does a very important although it's very mafan, but a very important role in the economy, which is, road taxes and then registration of foreign immigrants. They won't change it, because if they want to change it, the process will be, now they have to tender. They have to go look out for 3 to 4 different potential replacements, and they have to go through all this process. And it's going to disrupt the operations. And as a result, this is a very powerful mode for companies like MyG. So I just thought I'd share that, because for those of you so-called playing the theme, right? Those of you all who are trying to figure out which political company is going to do well as a result of whatever political event, usually those with the kind of mandate that MyG has will do well.
Intangible modes.
Yeah.
Those intangible modes. Regulation, virtually. Actually, companies that come to mind, ironically, will be Genting.
In a way.
TNB.
Yeah.
TNB. And a few others that has the mandate that, like what you said, that government coffers are not going to the top line.
Although Genting is slightly different in that it's a non-essential, you know what I mean?
Correct.
But
It's a
MyG is
discretionary.
discretionary. Correct. But you're right in principle that you want to find companies that have the license to be a monopoly, essentially.
Correct.
Those are very powerful modes.
Yeah. Genting, I think, is because now not just because of the mandate. There's so many other factors, like, COVID is just a double whammy lah. Put it this way.
Yeah, of course.
Yeah.
So this is comes to the end of our quick dive. If you like this kind of, if you like this kind of videos, you can check out some of our other videos here. And as always, remember to share it with your friends. Follow us on Facebook, Instagram, and see you in the next one.
Yeah. By the way, we do have an event with our good friend Rondi on Wednesday, the 18th. So by the time this video is out, it should be Tuesday. So hopefully you have one day of registration. We're going to do an overview of the oil and gas industry at 8:30 p.m. So it's going to be streamed on Facebook, our YouTube channel as well. So if you want to get in touch and to understand the industry better, I'll see you then as well.
All right. Bye-bye.
Bye-bye.